Joining me now is Ben Reitzes. He's head of technology research at Melius Research. Ben, I want to start with Apple here because there's questions about whether the high-priced items that they have could rise, whether if they don't rise, it hits their margins. What's the language from Apple that you think matters the most in figuring out for investors how this is going to play out?
It's margins, John. If tariffs have any impact on margin, we got to hear about it. I think it's a black box. It's really hard to figure out how much they plan to raise price versus how much they get hit by tariffs, how much they can move to India. And nobody knows the mixes. I know you guys reported a 60 mil figure, which might be a year or two out of India, but it's really hard to know. So we need guidance from them. Every point to product margins about up to 20 cents a share to EPS, maybe 15. And we got to know. We actually have numbers below the street in the near term because we think margins will be hit, but we're very optimistic long term about Apple. We think this will all get sorted out, we hope, within a year. And
you think margins will be hit because they won't sacrifice market share by raising prices?
Well, I think that there's hoops they got to jump through. At the very least, they got to change the supply chain, move some things over to India. Who knows about air freight? Who knows about what they're going to do to try to make sure they have ample supply in lower tariff jurisdictions that are going into the U.S. So we got to hear about that. I mean, the margins outside of this were on a great trajectory with the mix shift towards services. And we actually, in our model, near term, have it dipping towards the mid 40s, maybe even lower 40s, and then overall, and then going back up again once this gets sorted out. And we think it will eventually.
With Amazon, we talk a lot about AWS and the cloud business, but maybe more emphasis this time on the retail e-commerce business, given the tariff implications, especially around third-party sellers. And I imagine on one side of this, with Shein and Temu getting hit, that could be good for Amazon. But then those third-party sellers, maybe they don't do as much volume as they otherwise would have, and that hits them. What can we learn from this report?
Well, we don't cover Amazon, but we'll be looking at AWS quite a bit. And what they say about tariffs on their retail has a really big impact in terms of life for many investors. But we actually will be laser focused on AWS. They do a really good job there. Actually not looking for very much upside in cloud. We didn't have upside from Google, not expecting a ton of upside in cloud whatsoever from Amazon, but they're going to have to use that division, which doesn't have much tariff exposure. Maybe on the cost side they do when they're buying servers, and then use that to obviously be a profit offset. So I think that not only what they say about tariffs on the retail division will get a lot of exposure in the media and with investors, but you got to make sure AWS is humming so they can, go into that for earnings power when they need it.